Thinking about selling your business and wondering how much it's worth. So the formula is actually not that complicated. So in this basic example is that let's just say that you had a business that was doing $1 million in revenue and that you had 500,000 in expenses and that your profit was 500,000. So typically you would take this and do a 2 times multiple or possibly a 3 times multiple. But some things that you need to think about is how much is the business dependent on you in order to do this profit. So if you walked away, would the business still be able to do this? And do you have key employees that would still be able to run the business while you're gone? But if it's owner dependent and the business is still very reliant on you, that you're probably not going to command that much of a multiple, whether that be that 2 to 3 times. If you have a software business or a subscription business where you have a monthly recurring revenue, it can be substantially higher. You definitely would want to speak with a business broker to do this analysis for you. Obviously, you're going to have to submit tax returns for the last 3 years, profit and loss statements, balance sheets. So definitely be ready to hand over all of your financials in order to get an accurate. But this can give you a good idea is that I was just recently speaking with a business broker and they were talking about a lot of businesses that are approaching them that people have no clue what their business is worth and they think it's worth substantially more than it actually is that if you don't have a profit, there's probably not much to sell. And if you're the only one in the business, you have no employees, and the business is 100% reliant on you, it's going to be very difficult to sell. And then also to think about is that it doesn't really matter whether or not it's salary and or a pass through for your K1s, is that basically they're just going to combine those to figure out what that profit margin is. And then with expenses, you can add back some expenses. Let's just say, what's good at tax time is not good at selling time. So obviously when you're coming up with your expenses, you're trying to write off all your meals and entertainment and, really trying to pad that. But when it comes time to sell, it's not always great. But they can add back some of those seller discretionary earnings to really increase this number. So all things you need to be thinking about, but I would just say if you're thinking about selling your business is be prepared financially is to be giving over 3 years worth of tax returns, profit and loss, and balance sheet. If you found this helpful, make sure to subscribe for more.